back, guys, to the second episode of the Danso Financial Podcast. This episode is entitled The Intelligent Investor. For those of you guys that don't remember, my name is Anwar Cannon. I'm known as Mr. Cannon to you guys. And I'm here with the executive team for the Danso Financial Group. We have our founder and CEO, Charles Danso.
How you guys doing tonight?
We have our Chief Operating Officer, Daniel Goodman.
Pleasure to meet y'all tonight.
And we have our Director of Public Relations, Rami Ibrahim.
Nice to meet you, everybody. My name is Rami Anwar. I'm looking forward to a great series with you.
All right. And Rami is also going to be the second host for this podcast as well.
Yeah, tonight what we're going to kind of discuss for you guys is investment options. That's why we kind of titled this The Intelligent Investor, where you guys will kind of be learning is how to save money that you allocate, also and learning to invest into the stock market. I know that's been a big topic from you guys. So, we definitely here with that episode for you guys. And also a big component is cybersecurity. I'm going to preference cybersecurity, and Daniel will speak more on that. But what that kind of details is learning the different types of investment options that you utilize in terms of the platforms that you use it on, making sure that you're giving the money to the right brokers that you might be working with, and also just the right individuals that you're going to be investing with. But I'm just going to kick it off to Anwar to kind of start off with some questions first.
Yes, actually, I have some really interesting questions for you guys, and I hope that the audience really learns a lot from the answer to these questions. The first one is, what is financial freedom, and how is it important to this generation?
Financial freedom to me is very important for us is because of the fact of we're not limited to the olden ways. And when I say that is, when you go into your job, when you work with a lot of older individuals, you might speak to them and they might say something like, I come into work, do my 9 to 5, go home. But I have so much bills, I have so much stuff I have to pay. I don't really have any money, for myself. I've heard that many times, and I'm sure you guys can attest to that, even from your own parents, or, just people that you work with on the daily. So for us, I would say financial freedom is just learning how to control your spending, understanding how to diversify. And when I say diversify, it means moving your money and making your money work for you. We're going to touch more on that later, but making your money work for you is a very important component. And that allows you to kind of diversify yourself. And also, when you sleep, I know you guys have heard the terminology, when you sleep, your money's still working for you. So that's something that is very important to obtain financial freedom. Daniel, what about you?
I would say that financial freedom, in addition to the points that you touched, Charles, is financial freedom is really establishing a sort of legacy for your family, for yourself, for your generation that you're in and your future generations, because there's a difference between being rich and having wealth. And there are habits that wealthy people do that rich people don't do. The example is people who have money usually like to spend money and end up not having money because they want to buy the Beamer, they want to buy the high and the boats, yeah. The houses. They want to buy all of nice that.
Places,
and I mean they could have money. They could have a great job. They could have a business that's generating the money, but the habits that they have they're still broke. The mindset is still broke. So financial freedom goes just beyond having the physical money. It's more having a mindset. And that's the real takeaway, I think, with financial freedom. In addition to what you said, Charles, is freeing your mind from kind of you're literally living paycheck to paycheck, or money is kind of a stagnant. It's more of a renewable resource, and that's the mindset you shift to when you enter financial freedom.
Mm-hmm. Right. Well, these are great answers, guys. Rami, do you have something to say?
For sure. After hearing all of you guys speak, I just want to say that based on what Daniel said is very accurate, that a lot of people are able to make money, but very few people are able to create that generational wealth that we're all trying to achieve. Personally, I don't think that our journey in our lives are done when just we're gone. We have to set up our family and our future generations to learn from us. So
Leave a
I
legacy.
think that financial freedom is achieved once your money is able to make you money. Everybody has a salary or a job where they have a capped paycheck or a capped salary. That's how much they'll make in that year. But until you are making that money, make you some money on the side or invest it in other avenues, there is no financial freedom in that. That's my opinion.
All right, Charles. So I like the fact that you touched upon the fact that while you're sleeping, your money is actually making money for you. And Rami, I actually like the fact that you touched upon investing. So I want to ask you guys, what do you guys think is the difference between investing and saving? And how are they both important?
Good question.
Yeah, for me, I believe savings, I'm going to preference that first, is basically, like I said, having a job or even working through a business that you might own. And also, when you make that money, you take a portion of it and you put it into a bank. That's what I think the definition of savings is. Investing your money, on the other hand, is putting it into different type of assets. There are different type of assets that you guys, I kind of want to break it down for you. Is for one is the stock market. That's a big component that you can invest your money in. Property, real estate, owning homes, renting homes, and buying and selling them. And also a big component is your business. Your business also is an investment in its own, because those are the three components mainly that we kind of utilize nowadays for the individuals that do invest or want to invest, that kind of makes your money work for you. Because again, that money always is flowing in and out. Even when you're sleeping, the market is continuously moving your money. When you own property, you're continuously buying and selling. You're always going to make a percentage of that. And also when you have a business is something that's, basically I always say entrepreneurs will be the cornerstone in the next 5 to 10 years. So That's something that, having a business, you're always going to have individuals that kind of want to do business with you, regardless of whatever business that you're doing. But I also want to get a perspective from you, Rami. What do you believe that would be?
Well, savings is, as I mentioned, a form of just putting your money aside and building it up directly based on how much you're setting aside. But so it's almost like you're stashing it. But when it comes to investing gives your money the ability to grow. It's like a seed almost. By investing, you are planting your money somewhere, which is the seed. And if you take care of it and manage it properly with proper oversight, it can grow into more money. But if you are poorly managing it, you could lose that seed, all that money. So investing gives you the opportunity to grow what you have, as opposed to stashing it in your mattress or in the bank, as Charles mentioned.
And I think the two go hand in hand, because normally you would invest the money that you save. If you don't save any money, then you don't have money to invest. Mm-hmm. So
Absolutely.
It really starts with the habit of saving. And, it's as simple. It could be as simple as just taking 10% of a paycheck. Let's say you get $100, just save $10. Just put it in your savings account. Then take $5 from that $10 and invest it. You could buy a stock with $5. Mm-hmm. So it's just those simple things, those little things that over time will help build you that wealth, I feel. And yeah.
Great answer, man. Do you have something to add, Rami?
As you mentioned, in terms of saving, you can't have investments without having any money to invest in it. So saving might be one form. In today's age, where everybody is getting a check, not everybody's managing that check properly. Some people might put it all in the bank. Some people might put it all in the stock market. So it's really important to consider, especially with your own goals, how much you should allocate to savings, how much you should allocate to investing, and that is very, very key. And I know Charles has been definitely trying to talk about that asset allocation that I just mentioned.
Yeah, basically with that asset allocation is just having a flow through of your money. Basically with that asset allocation, what that allows you to do is basically diversify yourself. The one beauty I want to also touch on that is when you do have assets, it helps with tax season. That's a big thing. That's a big thing, boys.
Yeah, we hitting
I'm
something.
Just saying, for us is because a lot of write-offs that you get, a lot of opportunities that you get, that's why you see the rich stay rich or I won't even say the rich, the wealthy stay wealthy.
Yep.
And because of the fact that
And
those
they get taxed
investments,
less too.
You better believe the top 1% are looking for every way they can to get those tax breaks and to
Exactly.
not lose that money.
Exactly. So that's something that having those investments helps, because again, as Daniel kind of touched upon earlier, and I found that interesting, is just having the interest to invest rather than just put your money in the bank and let it sit, or using your money just to buy the nice car that you see, or wanting to get that thing that you could probably put your money towards putting into the stock market, where we're going to touch more on later on, but also just kind of diversifying yourself overall, because you always want to think, and that's what I say to a lot of people that I usually interact with, is you always want to think for the future. You never want to think for the present. That $5, like you said, Daniel, that stock that you put that $5 in, maybe in the next 5 to 6 months, and I've seen it happen even myself, it becomes $20, it becomes $50, it could even become $100. That's just from a simple $5 investment. So anybody listening, I would definitely say think of the future by starting with the now.
Very good point.
That's a great line, Charles. Thank you for your answer.
No
And
problem.
I just wanted to add on to that too. For those of you guys that are not really sure of the meanings of assets, an asset is basically what puts money in your pocket. So anything you invest in that puts money in your pocket in the long run or short run, it's an asset. And what intelligent investors do is that they gather a lot of assets and they stay away from liabilities. Liabilities is anything that takes money away from your pocket. That's a simple definition for both terms that I read from the Rich Dad Poor Dad book. I don't know if you guys heard about it before.
Yeah.
That was a
Very
very
good book.
popular book, especially when we were kids, and our dads were reading that book. I know about that.
Yeah, from Robert Kiyosaki, in which he explains that some people might confuse some liabilities for an asset. For example, a car. Some people might think of it as an asset because when you're trying to figure out your net worth, you usually count the value of the car. But it's a liability because the moment you drive off the lot, 25% of the value of that car goes down. So right there,
So you
and it
already
takes
lost some of
monthly
that
payments.
value.
Yep. And it's monthly payments that you got to make to keep the car. So that's definitely a liability. So just things like that too. All right. Now we're going to move on to another question that I have for you guys. How does someone, a beginner who's interested in investing in the stock market, how do they go about it?
Well, the stock market is just such a complex web of, valuations and numbers that to an outside person that might not have started to learn about it might be a little overwhelming. But the good part about the stock market is it can become a very personal thing to you in terms of, say, your interests, your life interests could align with your investment interests. If you like video games, you might be more inclined to invest in a technology company that develops video games or graphics, things of that nature. So you really, even if you know nothing about the stock market, you can start with what you do know in your life and then build on some research from that. All the stock market really is giving a value, a price to every company, to every asset out there. Oil has a price. Oil has a price, and gas has a price, as the same way as Apple has a price and Facebook has a price. So that's what the stock market really is just valuations of different companies and assets.
Yeah, basically, just to kind of piggyback off of what Rami had said, is also having the right tools in place. The three things I always think about is having a mentor, having a book, and also having a real world experience. The three components, I first say with a mentor is having someone that does invest in the market. I think that's a great tool to have, is someone that knows how to invest. You also have to find the right individual. Some people may tell you that they know how to invest into the market, but 9 out of 10 times that's never really the case. But there is also always that one individual that can teach you basically the right stocks, not even necessarily to pick, but the right stocks to look at. Also how to study company trends. That's one important thing to understand when investing into the market. And also
Very
thinking
important.
of your long-term growth. I think, kind of as a pun, we kind of named this the Intelligent Investor because that is based off an actual book that teaches about investing into the stock market, understanding how to allocate, basically shares of a company as your own just by investing $5 to $10 money into it. So that's something to always look at, and also real world experience. I think failure is the best teacher of success. I think a lot of people are hesitant. I myself have invested into the market and do invest into the market. It took a while because I was very hesitant. I always used to say to myself, if I invest maybe this $100 that I could buy, this game with or these sneakers with, I don't want to lose that. But, it takes a mental discipline. Once you get into it, you really start to learn that, be patient sometimes. Sometimes, that failure doesn't necessarily mean you have to jump. Also, don't also listen to the negativity around, maybe somebody might tell you that why are you using that money to invest into that stock market.
Definitely.
Some people don't understand what it is,
exactly.
and then they will think that you investing in it is a dumb idea.
Exactly.
But that's why, as I mentioned before, if you crack open any type of finance book, if you wanted to be a financial advisor, if you just wanted to learn about the stock market, one of the most important things to know is that every individual involved in it is different and has different goals and has different ideas of what they believe in. So if you are a novice that wants to begin in the stock market, as I mentioned, follow your interests, but also know what your goals are. Without knowing what your goals are in the long run, you will never be able to invest appropriately. That's the same thing with anything in life. If you wanted to be a professional athlete, you're not going to get there just by liking it. You actually have to know your goal and strive for it. So when it comes to the stock market, if you make $1,000 every month and you want to get into the stock market, determine how much of that you think is enough that you can set aside. And then once you hit, for example, for me, as Charles mentioned, I was hesitant to start in the stock market. Mm-hmm. It's scary. Mm-hmm. I decided personally that I was going to get X amount of money. For me, that was $500. Once I hit that in savings, I was going to plug that into the stock market over the course of 2 to 3 weeks with stocks that I saw were opportune for me. So that's what I would suggest everybody does, is think of how much you can invest and invest it accordingly based on what you want.
And to kind of piggyback off of those ideas, you want to know your tolerance level for dealing with stocks, because
risk.
It's risk reward, right? You're
that's scary.
If you put $100 in, chances are you can lose all of that money.
And that's something you got to deal with, correct? When you're dealing with the stock market, you always have to be ready to potentially make out with none of it.
Exactly. Yeah. So it's always a good rule of thumb to use money that you can afford to lose. But at the same token, knowing yourself and knowing how you want to invest in the stock market. For example, do you want to be a conservative investor or do you want to be an aggressive investor? For a novice level, conservative, more so a buy and hold, which is you buy a stock that you believe is just going to continue to rise, like a stock in Apple, for example, even though that stock is pretty expensive. If you buy a stock in a company like that, you have a good idea that the company is going to continue to make money, so your stock will continue to grow in valuation. Conversely, if you want to be sort of an aggressive investor and analyze the stock trends and do all of the fundamental analysis, you could do that too, for the people who are advanced at stock picking and stuff. But I think starting out, the best rule of thumb is to take it slow. Do what you feel is comfortable, and it's all about baby steps.
Get your feet wet a little bit.
Get your feet wet. When I started investing in stocks, I'm not gonna lie to you. I just took like $15 and I used there's this app called Robinhood.
Very good app.
I use that app. It's a very good app, by the way. We'll touch on it a little bit. But $15, just bought a stock that was like $10, and I was like, all right, cool. Just start.
We'll see how this goes.
See how it goes. You know, check on it here and there, and from there you begin to develop armor. Because you'll see the stock fall and you'll be like, oh, I'm losing money, but then the stock rises again in like 2 days, you know. So even with the recent, you know, things that are going on with the Dow Jones and stuff, it's going, you know, it's up and down. That's the thing with stocks, and that's the thing with life in general. It's always, excuse me, it's always going to be ups and downs, but those who ride the wave to the end will ultimately see the results.
Great point, Daniel, man. As you said, some people are not as risk averse as others. So you really have to know your level of tolerance, because God forbid someone invests $200, loses it all, and then next thing you know, it's going crazy.
If
so,
those were your last $200, then you're in trouble.
You're going nuts after that.
Don't put your whole 401k
Don't put
in
your
the
whole
stock.
money into the stock market. We'll tell you that much.
Absolutely, man. And one thing I did learn in school about investing in stocks too, my professor always used to say, if you're investing for the long term, you don't need to check your stocks every day.
You would
Because
go crazy.
some days it will go up, some days it will go down, and as you said, you will go crazy, man. So definitely that.
And just one thing to add on to that, because you mentioned school, is that there was one professor. He told me it was the most like when he told me this, I was just like, wow. I went and did exactly what he said. Pretty much, he said there's 3 types of stock indexes that you want to buy, and we'll get into what index is, pretty much a mutual fund. But index, you want to buy a total stock index in the U.S. market, a total stock index in the international markets, and then you want to buy a total bond index for the U.S. And that's getting into more of the portfolio aspect of it. But if you want to go a conservative route, and if you want to have your portfolio sort of balanced, no matter what happens in the markets, those are like the top 3 things to look into.
All right, so as you mentioned portfolio, can you just put in simple terms what a portfolio is and why it's important to diversify it?
I mean, a portfolio is pretty much just picture a pie chart. And in that pie chart, you have different assets. You have your stocks, you have your bonds, you have different EFT, you have all these different instruments, financial instruments, we'll call it, pooled into this pie chart. And the portfolio serves as sort of a risk leveler. And that is to say, it helps to eliminate the unsystematic risk that comes with certain companies. So if you buy 5 stocks from 5 different companies, let's say one is tech, one is in the food industry, one is another one. Even if the tech industry is going bad, the food industry stock is rising, your portfolio will balance out. So in simple terms, it's a way to, when we talk about diversification, the more stocks and the more assets that you have in this pie chart, in this pool, the less vulnerable, or I should say, the less variable your portfolio is going to drop into the negatives, and you can kind of keep your returns more so at a stable rate. So it's more of a stability component. Charles, if you want to add on to that.
Yeah, I mean, basically a portfolio is I think of it as a chart of basically everything that you're doing. I'm not going to give the full breakdown because, we're not in class, so I'm not going to do that. But, basically it's good to definitely know, or, when you guys ever have time, just go online and kind of check what a portfolio is, understand what a stock, a bond is, an asset, liability. Those are key terms to kind of understand.
And ones that we will be discussing further in further episodes. So it's good to look it up yourself.
Mm-hmm. Yeah.
So I just wanted to just touch on the portfolio is just basically everything that's in your supply cabinet that you own, whether it be stock, whether it be cash, whether it be Bitcoin, which are cryptocurrencies, whatever it may be, whatever you own is in asset wise that can be quantified technically, that is your portfolio. If it's your whole pie chart as Daniel described it.
Right. I heard, Daniel, you mentioned earlier Robinhood. Is that the main app that people usually use to invest, or are there other popular apps that people use as well?
There are other apps. There are other brokerage firms that people could go to start investing. For Robinhood, personally, for me, I like that they don't have the commission aspect. So every time you buy a stock, there are commission fees with every stock that you buy. So if the stock costs like $20, the brokerage firm might charge you like a $2 commission fee or something like that.
It's a decent chunk of change that if you work with. But if you think about it, that's in every business. You go to get your hair cut, and the haircut's $15. You're not just paying $15. You're paying like $18, $19. You got to tip your barber.
Exactly.
The tip is basically what equals the commission for a broker. But as Daniel mentioned, the good thing about Robinhood is that it's an app and you do it yourself. There's nobody doing it for you, so there's nobody else to pay. There's no fees. And that's what made it really special among young people such as ourselves that used to not be able to get into the stock market, because back in the day, you used to have to go to, Charles Schwab, or you used to have to go to the physical exchange and get yourself some. Now you could just go on your phone, 2 steps, you could have stocks in your hand. So that's why Robinhood is very nice. But as I said, you could go to a bank, you can go to a brokerage like Charles Schwab, or other websites such as Ameritrade. Those are some sites that I've heard of.
Yeah, I mean, those basically, as these gentlemen just kind of detailed, are great. I would guess sources to use, and a platform to use like Robinhood, and also different brokerage firms. I think also doing your research is a big component. A lot of brokerage firms that I definitely know of charge broker fees. Commission fees are put into that as well. And please, people, understand that just because you invest in the stock market doesn't mean that you take your money as soon as you go into the stock market. It takes time, but yes, you do. For those people that want to know, yes, you do get a tax return report on your stocks. So for those that want to know that as well, that does include into the stock market. But one thing I'll definitely stress to everybody is having patience. Patience is key in the stock market. This is a long ball game that we're playing here. It's like a game of pool. You gotta definitely know where to strike, where to hit, and it's all about precision when you're going to the stock market. Don't rush it, because when you rush it, you're never gonna hit that target that you're looking for. Because I would definitely say when you're in the market, you're not subjected to just focus on the big name, but you're also not just going into it just because it has a name as well. Research is something that I definitely preach to everybody.
All right, so I want to touch upon now the saving aspect more, because a lot of times we hear our parents tell us, oh, don't spend all your money, you got to save all your money. They always talk about saving, but they never really mention investing that much. So what I want to say is that for those of you guys that are listening, do not listen to your parents. Do not save a lot of your money.
Yo, I bet I get a call from Mrs. Cannon saying, why are you telling people not to listen to their parents?
No, but the thing is,
Mom, if you're watching this, I'm sorry. I ain't listen to this, man.
No, but really the reason why I'm saying this is because our parents lived at a time when interest rates for savings accounts were maybe 5%. Like that's good compared to now. Now interest rates are at 0.01 or 0.001%.
They also didn't have as much internet access to do their own research.
Exactly. So the thing is, your money is not really growing in the savings account. I'm sorry to say that.
It's not.
It's really not. So if you're really trying to be wealthy and really trying to build money, save some money, but also invest some money too, to make sure that your wealth grows. Because just leaving it in the savings account, man, it's not gonna grow that much.
So we talked about this earlier, but I just really want to stress it. You want to determine what works for you. Well, however much money you're making, you want to determine. You always want to have just a portion of money on the side, like an emergency fund. If you get hurt, or if somebody you need desperately needs, whatever the case may be, somebody says, "Let me hold $500." You gotta have your emergency fund for whatever it may be. You need it right now. That has to be available. That's your savings, Your savings is accessible at any time for you with your savings account.
Yeah.
But your investments, you do not want to touch. As Charles said, you don't want to touch it often, or you don't want to check it often, otherwise you go crazy.
Yeah.
It's a patience game. Savings, you can take it whenever you want. You want to go on a vacation tomorrow, you take that out, no problem. But investments, you should not be touching those on a day-to-day basis. You want to be strategizing the long game. It's a marathon, not a race. You know?
Right.
Yeah, so I mean, basically, what these gentlemen kind of detail, I mean, they make a great point. I think also having discipline is a key component in saving.
Yep.
That's where a lot of us fail at. I know a lot of our listeners as well can definitely attest to that as well. You know, when you make, you know, the decent money, you put into the savings, and then, you know, that checking might run low, and then, you know, you're saying, oh, you know, maybe I can always make this money back with the next paycheck. You know, that's the term that they call living paycheck to paycheck.
Yeah.
You know, when you let your money sit, you're more inclined to spend it. So why not put it into an account? Why not put it into property? Why not put it into your own business? I think that's something that's key, because, again, you are playing for the long game. So you're basically thinking of the future. And I definitely stress that, because I think that's big for us, is just planning, you know, for the next 5 to 10 years. The years pass by so quick. We're almost ending the year already, entering the new year. So it's just something to definitely think about. Another thing I would definitely want to stress is also having, when you do invest your money and you invest with different people, when you want to work with brokers, or you want to work with different accountants, different investment platforms, I think it's also understanding this risk that tie into that. And that's why I'm going to bring in Daniel to kind of explain the cybersecurity aspect of that. So,
yeah, sure. So, first and foremost, when you're dealing with brokers and looking at different brokerage firms, you want to research that firm to see if it's actually a legitimate brokerage firm. I think that's first and foremost, because a lot of these, you know, websites, a lot of these firms that, you know, you probably have never heard of, that has a very fancy name, you know, talk about all of the benefits that they can give you, but they're not registered with the SEC or approved by FINRA, which are regulatory agencies. So if any brokerage firm is not signed off by those two agencies at least, stay away.
They have no oversight, nobody to check on them.
Exactly. And, you know, and oversight is an important component. I mean, we could, you know, it could be a topic for another day, you know, that's how financial crises start, like the 2008 crisis and crises before that, is that financial firms that are not regulated appropriately by, or just are not regulated at all, can just do things that are just crazy and detrimental.
I know, you know, I feel dumb. You know, I feel like I'm going to put myself in somebody listening right now. Could you please describe what regulation is for us?
Sure. So regulation, to simply put it, is oversight of a particular operation.
Okay.
To ensure that you are compliant with the rules.
The rule keepers.
That was for you guys, ladies and gentlemen. I got y'all back.
Thank you,
just
Charles,
making sure,
making
sure y'all good. You know,
it's
make sure
the
everybody
police.
good in here.
You're the policeman. You know, you follow the rules.
Correct.
You know?
And every organization should have some form of regulatory oversight committee. Otherwise, they could go unchecked. Mm-hmm. And that's what Daniel was mentioning in terms of FINRA. The SEC, those are the regulatory institutions of the finance world, correct?
Yes, and they check it off.
Is there a website where somebody could see this?
Of course, you can go on FINRA's website. That's just FINRA.com, and you'll have to browse around, but they have it in the search bar most likely. You can look up the company name, and they'll be registered if they're, you know, if
every
done
company
their paperwork.
Every company that's registered is on there.
Yep, and Romney he's FINRA certified. He can attest to that. And
yes, they are no joke. I just want to say, I was a day trader. I was trading equities at a firm, and I had to get certified. Every single person that trades equities, might be another word for stock, just in simpler terms. Anybody that trades, anybody that deals with other people's money, has to be certified with FINRA, and that ties into what Daniel's saying. That's the oversight committee.
Yeah, so that's the first and foremost thing you want to make sure is there. The second thing that is just kind of like a good insurance policy for yourself is that, especially in nowadays, we're dealing with a lot of data breaches with companies we never thought would get breached, like Equifax, for example, that happened recently. Yes, you know, millions and millions of people just getting their data compromised. So
Facebook,
Facebook, you know, all of these crazy things happening now. So when you're researching these firms, you want to make sure that they have some kind of insurance policy by the Security Investor Protection Corporation, SICP for short. They'll usually advertise it that they're certified, that they're a member of that organization, and that pretty much is just, it's similar to your bank having the FDIC, where they insure a certain amount of your money in case of a catastrophe. So having that backing is something you want to look out for.
Yeah, and I definitely want to add on to what these gentlemen kind of are detailing, is also security is a big component when you are investing. I believe when you're in the stock market, when you're sending a lot of these emails that kind of contain your personal information, make sure that's in a secure email
server. Yeah.
You never want to share it. People that work the 9-to-5 game, do not share that information amongst your companies. And if you are investing into the stock market and your company asks, please, ladies and gentlemen, just tell them. Because I'm telling you that right now, if you don't detail it and they find out, it's going to be a long process.
Right.
So
yeah, you want to dot your I's and cross your T's. You want to make sure that, especially if you're like dealing with logins and stuff, like when you're logging into your information, that you want to have long passwords, and you don't want to have the same password for everything. Yeah. I know we're all a victim of it. You know,
yeah, definitely.
You know, we all do it. We all use the same password.
I kind of feel some type of way. I'm I like 3 accounts with the same password. I might have to change it when I get home.
Mr. Cannon 007.
But you want to really, at least when it comes to your financial information, like banks, your login information for your brokerage firm, and other personal, really sensitive data, you want to have those logins be diametrically opposed to each other. You don't want it to be the same. You want it to be long. And if they offer it, you want to have multi-factor authentication. You know, that's pretty much like when you try to log in, they might send a text to your phone, or you know, have some other way to verify that you are you logging into your account. You know, monitoring your passwords, and just making sure that when you're using certain websites that they have the HTTPS protocol. That's like the little green icon with
you might see a lock symbol.
Yeah, the lock symbol. Look, make sure that any website you go to, because they be fake bank websites out there, make sure that they have that lock. If they have that lock, you're good. And you know, we'll get into more cybersecurity best practices in future episodes, but this more ties into being an intelligent investor and just making smart decisions when investing.
Those are some really good tips, man. I'm gonna go be looking out for that, you know, lock symbol and 2-factor authentication, because we take that stuff for granted. What we really want to, you know, wrap today's episode about being an intelligent investor, what we want to wrap with is that the world in 2018 that we are currently in, almost 2019, it's so much different than it was 15, 20 years ago when our parents were more in our position. Exactly. It's totally different ball game. We cannot even begin to compare the two. So with that said, there's so much new info. Everybody can make themselves a knowledgeable individual by doing their research, writing out, you know, what their goals are. But overall, to be an intelligent investor, you have to know what you have available, what you want to have in the future, and then once you put that starting point and that ending point, you can then begin to fill in that path to achieving that goal. Know your goals, know where you stand, and then begin to build that road to be that intelligent investor.
Great advice, Rami. All right, guys. So the second episode for the Danso Financial Podcast is coming to an end. We want to thank you guys so much for listening to us, and for those of you guys that tuned into our first episode, The Art of the Hustle, we really thank you guys for listening to us.
And thank you, our guests, for having Daniel come down here from Albany, and Charles always being a very, very good informational man.
Yeah, just want to thank you guys for continuously following us. Please check us out on SoundCloud, Spotify, YouTube, our website. We will have that posted for you guys as well.
What is that website?
www.dansofinancial-group.com. Again, www.dansofinancial-group.com. We will be having that posted. Check us out on our Instagram, Facebook, Twitter. We will have that posted. Thank you guys. Have a great weekend and keep a lookout for our podcast.